All right, thank you, Simon. Thanks again for having me back, and thanks again, the Round the Clock Trader. I appreciate that. Earlier today, I was actually talking about psychology in my webinar that I do every Thursday, and some guys, his first time there is like, well, do you just talk about psychology? Because I'm not really interested. And it's like, no, there's a lot of other things I talk about, such as setups and money management. But it's a matter of sometimes what you want to hear and what you need to hear. And I think we're all setup junkies. But if you are interested in other things, I have a lot more to talk about on my website, obviously, and some of those things that Simon mentioned. I want to thank everybody for coming. I appreciate you taking time out of your busy schedule to be here. I'm honored by your presence. There's the disclaimer screen. You can read it on my website if you're really bored and can't sleep at night. There are some interesting things in there, though. I noticed the other day it says, if you smoke after sex, you're doing it too fast. So I thought that was kind of interesting. The short version disclaimer is all predictions are about the future, and a lot of stuff can happen between now and then. Now, I'm a pure technical trader, and if you think about technical analysis, my definition is this. You're reading the emotions of the market participants while embracing your own. Now, I use the word embracing very carefully and not controlling, and you'll see why in a few minutes. Now, the reason technical analysis works is because that the market participants behave in a very irrational manner. A famous baseball player from the United States used to say a lot of yogiism, so to speak, and if you Google him, you'll see a lot of funny things that he said. And one thing he said was, if the world were perfect, it wouldn't be. Well, if the market were perfect, it wouldn't be. Everybody would agree upon price, and the market would not exist. Now, why psychology and physiology? In more recent years, I've come to learn that a lot of the problems that you and I have with trading are not just psychological problems, but also physiological problems too, and I'll flesh that out in a few minutes. Well, the reason psychology is so important that you must never forget that the greatest methodology in the world is useless if you don't have the proper mindset to follow it. Now, I do have some good news, but first there's some bad news. We're not made to trade. And this is on both a psychological level and the aforementioned physiological level. The same things that are keeping you alive physically and making you successful in life from a psychological standpoint can be detrimental to your trading. Now, I'm not a neuroscientist, and I don't even play one on TV, but I have stayed at Holiday Inn Express, and I don't know if that joke's going to translate over, but I did do a quick Google to notice that you do have Holiday Inn Expresses. But over here, there's a commercial where if you stay at Holiday Inn Express, you're an expert the next day. My point is that I'm not a neuroscientist, but I have studied some of these physiological aspects of trading, and more importantly, over the past, and I hate to count, but it's been 20-something years, I've experienced quite a few of them too. Now, you have this little thing in your brain, a very small part of your brain called the amygdala. And I found this definition that I liked quite a bit as far as this presentation is concerned. It's responsible for the perception of emotions such as anger, fear, and sadness. Now, perception is huge. This means that we could actually change our perspective. Now, the thing about it is it's very tiny, and it makes it very fast acting, and it shuts down much of the rest of the body when you're faced with danger in order to stay alive. And the reason it's so efficient is that when you're faced with imminent danger, there's not much time to contemplate your navel. And this is great for a flight or fight situation, but in trading, not so much. And in modern day environments, it still can be important too. Let's say you're about to step out on a curb, off a curb, and there's a cab coming at you. You don't have time to contemplate your navel and think, well, is this cab driver a nice guy, or is he angry? Is he mad at me? Is he intentionally trying to hit me? You simply just jump out the way. But in trading and other non-life-threatening situations, not so much. Now, trading is a lot unlike life, and we're going to explore that in a lot of details over the next few minutes. But it is like life in one aspect. Trading, like life, is a matter of making decisions and living with them. Now, making decisions is very, very easy. Living with them is not. Making the decision to marry the most beautiful woman that I ever met was a very easy decision. Living with her is not. Now, I'm half kidding. Now, what's interesting about when it comes to making decisions is that you can't make a decision, any decision, even what you're going to have for lunch, without emotions and stress. A few years back, I was speaking in San Francisco, and Denise Scholl was up before me, and she talked about the fact that we can't make decisions without emotions. And some of her research was her own, and some of it was from the research of Damasio. And she talked about the fact that if a doctor is meeting with a patient and says, okay, we're done with our meeting, but do you want to meet again next Tuesday or next Wednesday? And that patient has had the unfortunate accident or illness where the emotional part of their brain has been killed off or injured, they cannot decide because there is no consequence with that decision. They'll think about, well, these are the reasons why we should meet on Tuesday, these are the reasons why we should meet on Wednesday, but neither one has a consequence, so they arrive at a stalemate. So the point is that you can't make any decisions without emotions and, of course, without stress. So this is very important. You always hear these traders talk about, got to control your emotions, got to control your emotions. Well, you can't control your emotions. You cannot eliminate your emotions. But if you embrace them, then your life becomes a lot easier. Now, again, as what Yogi said, you're dealing with an emotional being, and it's made up of a lot of emotional beings. So you got to realize that these people might act in an irrational manner, and by the way, you're one of these people. Now, from a psychological perspective, we're just simply not made to trade. Well, everyone here is motivated and a person of action. Well, how do I know that? Well, you're taking time out of your busy schedule to learn more about something. And through my client base, I've met some of the most successful people in all kinds of fields: dog trainers, doctors, lawyers, automatic transmission mechanics, very highly skilled and highly educated and highly successful people, and also very highly motivated. So congratulations, you're a motivated person of action. Unfortunately, that pretty much makes you suck as a trader, to put it mildly. Now, getting back to the real world versus the trading world, and life experience is the best teacher. And of course, in trading, you will need some experience too. I was speaking at a conference last, I guess, October over in Vegas, and one guy was kind of bummed out. I'm like, well, what's going on? He says, I'm not profitable. I was like, well, how long have you been trading? He said, 3 weeks. And I'm rolled my eyes. It's like 3 weeks. You know, you got to give it some time, and you will need some experience. Unfortunately, the strange thing about markets, the dichotomy there, is that the market can often really be a bad teacher. Let's say that you do not honor your stop and the market turns around and you make a whole lot of money on a position. Well, the market has just taught you not to use stops, and unfortunately that'll work until it don't. Now, logic doesn't always apply, so remember that markets are emotional and so are you. And you also have to have a high degree of control in your life, and that's what made you successful, being able, for the most part, to control the situation. Now, in trading it, you have no control, at least when it comes to the final outcome. Mark Douglas is one of my favorite authors, if not the favorite author, when it comes to trading psychology. I would urge you to read his books. And in one of his cassette tapes, I don't know if you people are old enough to remember that, but these little things that they're plastic and they have like a little wheel and there's actually tape in there. But I have one of his cassette tapes. I'm dating myself. And on that tape, he said something that made a lot of sense to me. All it takes is one a-hole to screw up a perfectly good trade. Now, after you've been trading for a while, at times you might begin to realize who that person might be. I was speaking at the aforementioned conference, and I didn't know this, but people who day trade, a lot of them short parabolics. Well, I'm actually long those same stocks that they are shorting. So if they pile on and they're successful, they're going to take me out of the trade. So embracing that goes a long ways towards making you successful and not stressing as much over your trade. Now, obviously, in life, again, you are a person of action, and that's what makes you successful in life. But in trading, patience is key. And here's the thing. In life, failure is often not an option. If you are an engineer and just one of your bridges falls down, you probably won't be an engineer for very long. Or if you're a surgeon and you're killing off patients in fairly low-risk surgeries, you probably won't be a surgeon for very long. Yet in trading, you're going to be wrong a lot. And as I was putting the slides together, I got to thinking about it. I'd rather be wrong 90% of the time and make a lot of money than 90% right and make a little money or no money. Now, I tend to pick on the reversion to the mean type traders, and it's not that I have a vendetta against them. It's just that I'm not a big fan of a system that makes a little, then loses a tremendous amount of money. I would much rather trade a system that's less correct, but occasionally makes a lot of money to make it all worthwhile. Greg Morrison once said that a market only spends 4% of its time at new highs. And Robert Frey once said you spend 75% of your time in a state of drawdown as a trader. And it's funny, I told my wife about that. 3/4 of the time you're losing money. And she goes, wow, that explains a lot. You know, it helped to give her a little insight as to my mood. And I just thought it'd be kind of interesting, based on what Greg said, to go in and look at one of our biggest trades of the year. And even on this great trade, I've plotted in the new closing highs in green. You can see a very small amount of time where we actually gaining ground on this position. And the rest of the time in red, we were actually giving up open profits on the position. So even on good positions, you're going to be wrong a lot of the time. Now, as far as the portfolio, I just took a snapshot from earlier this week, and you could see there's roughly, let's just say $6,000 round numbers of gains on a hypothetical 100K account. But notice that 7,000 of that is just this one trade. So most of the stocks, at least in this snapshot, are losing trades, and we've got one stock that's actually a winning trade. Now, if you find yourself having difficulty trading, and again, and you're successful in life, which I'm guessing you are, you might have had 10, 20, 30 years or more, believe it or not, of bad training for trading. Now, over the years, I've asked this question many, many, many times. And a few months back, I actually got my answer. Often in a webinar, I would say in passing quite often, why do the same people who strive for perfection in life settle for such mediocrity in markets? Many times people will send me charts. And these are the aforementioned successful doctors and lawyers, etc. And the charts will look like an electrocardiogram. Now, we're trend traders. We like to trade trends, obviously, and the market ideally should be in an obvious trend. But in spite of this, these people are sending me these horrible-looking charts, and I could never figure out why do these successful people deal and settle with such mediocrity in markets. Well, I got my answer. I received this email. I think I can answer the question about why highly trained and skilled professionals can't seem to get the chart reading / trading thing. I am a physician who specializes in psychiatry. Doctors, lawyers, and mechanics are trained to take whatever train wreck comes along and fix it. We're expected to do something immediately regardless of the conditions and despite the possible negative outcomes of our actions. As a physician, if you dwell too much on the potential negative outcomes, you will become a deer in the headlights and not be able to function. So we tend to minimize the negative aspects of the situation. Waiting for the perfect pitch is not what we are trained to do. And here's the clincher. We have no training to prepare us for sitting on our hands and waiting. It is simply not part of the mindset. Okay, so I think I've established the fact that we're not made to trade, so what can we do about that? Well, I have some good news. You know what you're doing wrong? You know what you're doing wrong. Like in this picture here with the pussy and the PC, there's your problem. A lot of times when I work with someone new, I'm thinking, geez, how am I going to fix this person? How am I going to figure out what they're doing wrong? So I'm like, well, okay, let me just ask them. And 9 out of 10 times, well, I'm not honoring my stops, I'm taking profits too soon, I'm trying to make something happen in less than ideal conditions, I'm day trading when I should just be following along longer term. The list goes on and on. And if they don't know what they're doing wrong, usually I can look at their trades and figure it out. One story that I often retell is one client of mine was frustrated because he couldn't make any money with my trading service. Now, we don't always make money, and I probably would sell a lot more services if I pretended that we did. There are ups and downs, obviously, but over this period of time, we made a little bit of money. Not much to brag about, but a little bit. And he said, in fact, he demanded, he says, you need to look at my trades, and you'll see that I did not make any money trading your service. I was like, okay, well, let's take a look at it. So in looking at his trades, I pulled out all the trades that were directly related to my trading service, and he actually did a really good job of following along. He did, in fact, he did a fantastic job. If I were to hire someone to trade what I recommend, I would hire him. But he had these 20-something day trades that I had to pull out that had absolutely nothing to do with the service. It's a stock I wouldn't even trade as a position trade. So I called him back and I said, hey, you know what? I think I figured it out. You actually made like $300. Again, it wasn't much, but it was a little bit. I said, you actually made about $300 following along, which, by the way, you did a really good job. But you made these 20-something day trades or 20-day trades, and you lost $5,000. So without the day trades, you would have actually been profitable. And I was a little shocked by what he said next. He said, I know. So it's kind of like the old doctor joke. It hurts when I do this. The solution is simple, quite frankly. Don't do that. Now, let's talk a little bit about what happens on a physiological level. Again, recognize that each decision has an emotional consequence, so you're going to have to reduce the amount of decisions that you are making. Now, in my trading service, I'll give an exact place to get in, an exact place to take partial profits, how to trail a stop. Now, every now and then there's a little discretion, but for the most part, everything's fairly mechanical. And this happens quite often. A stock will trigger, let's say we had stock to enter at 740, and the next day or the day after, I'll get an email from somebody. It's like, hey, Dave, I didn't take that trade. Should I get in even though the price is higher? Hey, Dave, I didn't take that trade. Should I get in even though the price is lower? Is it a bargain now, you think? Should I let it retrigger? What should I do? Or should I just not do anything? Well, the point I'm making here, you had one decision, and now you're faced with 3 or more decisions because you didn't follow the original plan. Now, with each unnecessary decision comes more and more and more and more decisions. And you could see that it begins to grow geometrically. And again, remember, every decision has some stress and emotions attached to it. So you have to reduce the amount of decisions that you're making by simply doing what? Following your original plan. Now, this is one of those cliches about the market, but it's one of the few true ones. You need to be as close to the market as you need to be, but no closer. Trust me, if watching a screen all day made you profitable, I would be one of the most profitable traders in the world. Now, I'm no longer staring at a screen, but this was me hunched over for many, many years, and I'm still watching a screen a little bit too much, but I'm definitely recovering. And the more you watch that screen, the more likely you will be to make an unnecessary decision or to put yourself into a state of regret. Many times I'll look at the screen and I'll drop a couple of F-bombs and I'll go for a walk around the block. Now, where I live out in the country, a block is actually 2 miles. And I'll come back in all hot and sweaty, and then not every time. If every time that's all I had to do, I'd be a lot better shape than I am. But many times the market will reverse while I'm out, and I realize that I put myself through that emotional round trip for no good reason. So I think that we need to minimize the amount of decisions that we're making, especially during the heat of battle. We're only wired to make so many decisions, and this is why the burnout rate is so great in a career such as an air traffic controller or an emergency room doctor in inner city where there's a lot of violent crimes. There's too many ups and downs, too many decisions in the heat of battle, and eventually you burn out. In fact, what's kind of interesting is as I'm studying more and more of these physiological reasons, I've learned that your neurons can actually become somewhat burnt on the ends from all this stress and decisions. So burnout may actually be an actual physical thing. Now you have to embrace the fact that your little brain, your little emotional part of your brain, might be controlling the rest of you. And again, that's the amygdala, a very small part of your brain. Now, one way to wrap your head around that is to be cognizant of your own psychological urges. And this is in trading and in life. So in life, I would encourage you over the next few weeks, or just for the rest of your life for that matter, next time you find yourself in some road rage or pissed off at someone, or if you get into a heated debate with your spouse or significant other, think about those emotions that you're going through and recognize and embrace them. And that's going to go a long ways towards helping you with your emotions and your trading. Now, I've got a little exercise for you, and this has been a wonderful thing for me. It's been a bit of a godsend. I'd like to tell you that I'm perfect with it, but I'm not. But the next time you find yourself getting ready to have an emotional reaction to your spouse or significant other, this is all you have to do. Don't. Count to 3. And what's going to happen is that's going to give you enough time to bypass that amygdala. All it takes is a few seconds. Because remember, that amygdala it's fast acting. It just has this immediate reflexive response. But if you take a deep breath, count to 3, you're able to bypass that super emotional part of your brain, or the actual emotional part of your brain. So I like the concept of calling it a panic monster, and you don't want to wake that panic monster up. Dr. Robert Marr was speaking at a conference that I was also speaking at last year, and he gave a wonderful speech. I wish he'd put it up on YouTube. But he talked about a lot of fascinating things about the emotional part of us and how stress is actually a relatively new term and all these different things. And he talks a lot about fears. And one thing that he said that makes a lot of sense is to tiptoe past your fears. We are people of homeostasis, meaning that we don't accept or we can't embrace big change over a short period of time. But if you can take a small step, you can make a small step towards making that change that you want to make. And the example he gives in his book, How One Small Step Can Change Your Life, the Kaizen way, was a lady that came to him that had weight problems, and she's gone to other doctors in the past, and they're all like, just do a bunch of exercise and eat right. And obviously that wasn't working for her. So he said, I just want you to do this one thing. I want you to, next time you're watching TV, I want you to stand up during one of the commercials, and I want you to march for 1 minute. And she's like, well, that's all I have to do? He says, yeah, just do that and get back to me. So she did that, and before long, she started marching during all the commercials, and then within weeks or months, she actually ended up in full-blown aerobics and got physically fit. So relating that back to trading, I like to see it as you want to tiptoe past the panic monster and don't wake him up. So take small steps towards your goal to tiptoe past your fear. Now here's the thing. I'm not a tough love kind of guy, but a few years back it dawned on me the same person has emailed me for 10 years. And I kept telling him, it'll be all right, do this, do this, do this. And it kind of hit me one day. It's like, I'm doing a disservice to this person because I'm not giving them some tough love. So here's your tough love. If you're having trouble, just follow your trading plan for one trade, just one trade. And if you can't follow the plan for just one trade, then maybe you shouldn't be trading. Now, if you are attempting to follow that plan and you find yourself getting ready to micromanage or abort the plan, then we come back to tiptoe past the panic monster. All you have to do is breathe. Now, this is kind of quirky and mamby-pamby, but positive self-talk can be quite beneficial. I'm going to follow this plan regardless of the short-term outcome because I know that I will only become successful longer term when I consistently follow my plan. So you might want to write that down. Now, remember, the market is this big emotional being, and it's actually the urges of the others is what makes you profitable, provided, of course, you're willing to embrace your own emotions. And this is where the serenity prayer comes to mind. God grant me the serenity to accept the things I cannot change, courage to change the things I can, and the wisdom to know the difference. But as traders, we have to be really careful because some of us pray the genius prayer, which says, God grant me the courage to change the things I cannot accept, serenity to accept the things I've changed, and the wisdom to know I'm different. You have to remember that you're trading traders and not markets. Tom McClellan gave a really good speech a few years back at the American Association of Professional Technical Analysts meeting, and he talked about the fact that when you buy a stock, you're forming a relationship between you and the company, but you're also forming a relationship between anyone who bought that stock prior to you, and he went on to say, and those people will screw you. Well, if you think about it, people sell for a variety of reasons, and quoting his late mother Marion, she said, some people buy when they have money, some people sell when they need money, and others use methods that are far more sophisticated. So you have no control over those other people. You can only embrace your own emotions. And again, as Douglas said, all it takes is one a-hole to screw up a perfectly good trade. Now, when information is changing or uncertain, according to Montier, stress is going to be at its highest. So you have to plan while things are what? Static. You have to plan while the market is closed. I like to get a big cup of coffee. I go through a couple thousand stocks every night looking for opportunities. It's like being on a treasure hunt. I really enjoy that process. And during that process, while everything's nice and calm and I'm sitting there relaxing, I make my plan. Now, I know it's cliche, but you need to pick the best and leave the rest. If you're picking the best stocks or other markets to trade to begin with, then a lot of these psychological problems will go away. So unless you think you have the mother of all setups, you need to walk away but be okay. It's been proven that regret is a very big motivator. It could cause an extreme emotional response within us. Think about the times in your life you passed up on some huge opportunity and think of the regret involved with that. I was in
Dave, we seem to have lost sound. I'm not sure if you can hear me. We're definitely losing a bit of sound. Does anybody else have issues as well? I've just lost Dave completely for the last 2 minutes. Yeah, Dave has gone offline. It seems the connection must have failed there. So we're still online. Obviously, the webinar is still here. I can just tell that Dave has momentarily dropped the connection. So let's just be patient. Normally, these things pick up again automatically, and he should be able to come back to us in just a minute or so. Okay, I can see that he's logging back in now. Okay, we're just listening to the last 20 minutes of Dave Landry's presentation, Trading Psychology. Okay.
Now I know that yeah, I got it back. And that concludes the secret of trading.
Say no more. That's it. We can switch off, go home.
Yeah, that's it. We can all go home now. So I got done early. How's that?
Yeah, I hope you didn't miss that. Fantastic, Dave. I think we can spot maybe about three or 4 minutes at the most.
Oh, that much. Okay.
Good to have you back.
Okay. Well, let me just back up a few slides because I know this will be recorded, correct?
Absolutely. Yeah.
Okay. I'll just back up a couple slides. Again, you want to let the market make as many decisions for you as possible. And one thing you can do there is you could place a stop in the market and let the market take you out of your positions. Now, remember that the more observations you make, the more likely you will put yourself into a state of regret. Remember, as I said earlier in the presentation, back when the audio was working, that most of the time you actually will be losing money as a trader, and that's kind of hard to wrap your head around. And if you're a position trader like I am, I'm a swing to intermediate term trader, meaning that I'll get in for a swing trade, which is hopefully over a few days, and get a partial profit out, and then I'll stick with the position for what, and again, I hate to use the word hope, but hopefully turns into a longer term trade. A lot of times there's absolutely nothing to do. And even if that stock's going sideways for weeks and even months, as long as I'm not stopped out as a position trader at that point, all I have to do is follow along. But I know that if I'm sitting there watching the screen, I'm going to end up in a state of regret. As an example, I was working on a column a few months back, and we had a stock and we were up 20%. I looked over my screen, I'm like, oh wow, we're up 20%, and I looked back to my column and kept working on it, and then I looked up, and then we were up 18%. I'm like, oh, well, now I'm down 2%, and then it was 17%. It's like, well, now I'm down 3%. And the next time I looked at it, or I just kind of stared at it, to be honest, it started crawling back, and then we're only up 15%. Well, 15% is nothing to sneeze at. If I would have kept working and at the end of the day checked the price, I'd been like, oh, wow, I made 15%. But instead, I put myself into a state of regret by watching every little tick. So this sounds really simple, but sometimes the solution to a lot of these problems can just be turning off your screens. And again, you can let the market make your decisions for you. You can let the market trigger you into a position by putting in an order, or you can let the market take you out of an existing position by putting in an order and then going about your life. So even on favorable moves, again, the market does spend a considerable amount of time, easy for me to say, backing and filling. Now, while you're waiting patiently for your next trade, there's only one reason that you should ever trade. It's kind of interesting when I'm talking to a crowd of people and I ask why you should buy a stock, and I get all kinds of answers. But every now and then, somebody's got the right answer. The only reason you should ever buy a stock is to make money, and never for action. As I often preach, if you're looking for excitement, then go to Vegas. Or have an affair. That way you only lose half of your money. So trading done properly all boils down to patience. Steve Edmondson once said, I spend a lot of time researching things we ultimately don't do. Again, I go through a couple thousand stocks every night looking for an opportunity. And there are a lot of days where I don't find anything and there's nothing to do. But that's okay. At least I did my homework. And I keep doing that homework because maybe I'll find another one of those big winners like the one I showed earlier. Doing nothing is harder than it looks, Ken Lambert. And this is especially true for people like you who are successful because you didn't get to where you were by being lazy and sitting on your butt. But as I've explained to quite a few people, trading done properly can be quite boring. You're either waiting for setups or you're waiting for the market to move. As I often say, we're really more waiters than we are traders. I think Jimmy Rogers said it the best. I think this was in the first Market Wizards. I just wait until there's money lying in the corner, and all I have to do is go over there and pick it up. I do nothing in the meantime. Now, after every trade, an honest post-mortem will reveal a lot. Back your chart out to where you got into the position and look at it and say, if I was just seeing this stock or whatever market you're trading for the first time, would I actually take the trade? Were the sectors also trending? Was the overall market trending? And if not, do I have the mother of all setups? And also look through the sector to see if there was something that was set up in the sector that looked even better. And this is part of what is known as deliberate practice. It's not just practicing all these things, it's actually working to get better at it. And there's quite a few people who have written extensively about that. Malcolm Gladwell, my favorite author there. Erickson has written quite a bit about it, and I'm actually reading about him now. But deliberate practice is very important. And a lot of times, you'll find yourself thinking, what the hell was I thinking? But that's okay. That means you're getting better, and you realize that, hey, I now recognize this trade wasn't as great as it looked. Now, here's the thing. Let's say you do a post-mortem and it looked like the mother of all setups, but you still lost money on a trade. Then pat yourself on the back because you took a setup that you should have taken. Now, as I said earlier, I know that you know what you're doing wrong, but let's flesh out just a couple things real quick, just in case. Do you really know your methodology? And again, I tend to pick on the mean reversion guys because it's pretty obvious the flaws of that type of trading. With mean reversion, you're taking a very small gain, but you have the potential for a tremendous loss. Now, if you can wrap your head around that, and that's how you want to trade, then fine. That's what makes a market. But just make sure that you know your methodology. getting back to Yogi Berra, he once said, in theory, theory and practice are the same. In practice, they are not. Somebody emailed me a system a while back, and it had a 50% drawdown in it. Now, this was a mechanical system where everything was in perfect hindsight, and there weren't any actual trades. And if you guys have done system testing, you know based on the curve fitting, and I used to spend years and years system testing. I have a degree in computer science. And all that system testing actually made me a discretionary trader. But that's another conversation. Anyway, I pointed out to this individual, it's like, well, look, you had a 50% drawdown. He goes, yeah, but by the end of the year, it was profitable. I was like, okay, well, could you really trade through a 50% drawdown? And a better question to ask, let's say you had clients and you were running money, would your clients sit through that 50% drawdown and let you lose half of their money? And the answer to that, obviously, is no. Now, with my stuff and trend trading in general, it is a bit of a game of outliers. One or two big trades can make your year. A lot of times people will say, Dave, I just got to quit your service. I'm not making any money. It's like, well, wait a minute. Yeah, we don't make money all the time, but this was a pretty good period. We need to figure out what's going on here. Did you get this big winner? No. Did you get this other stock here? No. But I got those 6 crappy trades you recommended. I took every one of those. Like, well, there's your problem. Now, again, getting back to the patience thing, if you're going to be a trend trader, and by the way, the only way to ever make money in the market is to capture a trend. And this is something that is just kind of like pretty amazing epiphany. You have to sell higher than you buy, obviously. Okay, let's say you buy at A and sell at B. Well, from A to B is a trend. Connect the lines. So that's why I'm a trend trader, because the only way you could ever make money in the market is to capture a trend. And even if you think, oh, I'm a contra trend trader, I'm a reversion to the mean trader, well, a new trend better come along really soon. So again, it's a methodology of patience both before and during. And again, that's my methodology and trend trading in general. Dan Reed once said, you will define your poker greatness not by the hands you play, but by the hands you fold. Now, for my methodology, that folding is twofold, knowing when to stay out. If the market is chopping sideways, then it's better that you're not trading. It's better to sit on your hands. As I often say, it's better to be on the dock drinking beer, wishing you were out to sea, than be out to sea, wishing you were on the dock drinking beer. And I have a few personal experiences with this. One of the worst was about 400 miles out of Bermuda. Back in my prior life, I did a lot of sailboat racing. And the captain woke up, and he's groggy. He looks down. He goes, "Hey guys, there's a lot of water down here." And he's like knee-deep in water. It's like, oh crap, the boat's sinking. And what was really scary about that is a good friend of mine had a boat by the same manufacturer, and he was having a similar problem on his boat. 2 other boats that I know of sunk, and there were some boats nationwide that had sunk by this manufacturer. They had a problem with their lamination process of the fiberglass, and it was a class action lawsuit. So I'm like, okay, we're going down. Will I survive this? I don't know. But it's better to be wishing you were in and not be in than in and wishing you were out. And then the other folding is allow yourself to be taken out of a trade when the stop is hit. Back in the late 80s, I walked into the gym. Those of you who know me, don't laugh. I haven't missed an annual workout in many years. And I knew the receptionist, or through the gym, she knew me. And she's like, "Why the long face?" And I'm like, "I'm in a bunch of bad stocks." And she goes, "Well, sell them and buy some good ones." And I kind of growled at her a little bit and walked off and hit the weights, angrily walked off. I got an MBA. What does she know about trading? Well, obviously a lot more than me. Now, I'm not saying wipe out your entire portfolio overnight and start over, but if you're getting stopped out, then let that ebb and flow control the portfolio. So again, in life, and I'm kind of beating a dead horse here, and I realize that, but in life you must take action to be successful. In trading, you must do nothing unless there is something to do. Now, let's talk a little bit about possible psychological issues that you may be having. Are you really being your own devil's advocate? Are you trading in the best conditions? Do you really know your methodology? The guy who is defending a methodology that loses half of its value is probably not playing devil's advocate. Now, is there anything that could potentially doom you from the start? You're going to have to answer your own questions here, but I can help you. Does your spouse or significant other support your endeavor? And if not, can you lay out a carefully well-thought plan? You could say, okay, honey, this is what we're going to do. We're going to do this trading thing. We're going to follow this swing to intermediate term system that Mr. Landry came up with. And there's going to be some losses here and there, but longer term, looks like it's going to be okay. We're going to start really small. In fact, we're just going to paper trade for a while to make sure we know what we're doing. And once we feel like we could successfully do it paper trading, then we're going to trade at a very small size. And again, there could be some losses, but we're just going to chip away at it and slowly build up to a 2% per trade. Or you get the idea. Some sort of carefully well thought plan. And I bet if you did that, you could probably get the support of your spouse. It's kind of interesting. A client of mine called me up, and he's a really good stock picker. And I don't know if I said this while the audio was out, but he's a really good stock picker, and he does really well. But every now and then, it goes to his head when he's doing really well, and he tends to over leverage and start taking mediocre setups, and then he begins to end in a downward spiral. And a lot of times, if he has a drawdown, which is inevitable, he'll begin to do same sort of behavior. He'll begin to overtrade, over leverage, etc., and blow up an account. So one day I asked him, I said, look, would you be willing to get your wife involved? Tell her what you're doing. Let her see what you're doing, and kind of bounce these ideas off of her and let her look over your shoulder. He's like, oh, no, that would end the marriage. So again, you know what you're doing wrong. Now, here's something that's very easy to identify. Are you adequately capitalized? Do you have an account with enough capital that you have allocated just for trading? If you're trading with the rent money, then yes, you're going to mentally monetize those gains, or just as bad, you're going to exit at the first signs of adversity and never catch a trend. Now, this is pretty easy to answer. Are you dealing with any major life crisis for you or your loved ones? That's probably a really bad time to be trading if you are. And ask yourself, is there anything that has absolutely nothing to do with trading that could be affecting your trading? Now, here are a few easy hacks, or to rehash some of the things I said. If your problem is that you're micromanaging trades, in other words, you're aborting the plan, then that's pretty simple. Just turn your screens off. Are you trading in less than ideal conditions? Well, that's easy too. Find something that's far more interesting. The reason I have that in quotes is I was talking to a client a while back, and we both agreed there was nothing to do. And I said, well, I'm going to go back and work on this Trading Full Circle course I've been working on for 2 years. And he said, well, I'm going to go find something to do that's far more interesting. If you're hesitant to get into trades, you're sitting there watching the screen, you watch a trigger, but you can't pull the trigger, then use a stop entry order. Again, let the market make that decision for you. Now, if you find yourself hanging on to losers after they hit your stop and hoping, then again, the solution is simple. Put in an order ahead of time and let the stop take you out. Again, let the market make the decision for you. Now, if you're obsessing over open losses, whether they're losses in your open portfolio or losses from your open profits, in other words, you're giving up some of those open profits, which you will have to do, because obviously markets don't move in a straight line. A lot of times markets will go up, correct, go up, correct, go up, correct, rinse and repeat. And if you go in and look at that position that we're in, it looks a lot more like this. But longer term, you know, from here all the way down to here, that's the 100-something% move. But over the short term, you had to give up a lot of open profits along the way. You were up 50%, then you were only up 25%, then you were up 75%, then you were only up maybe 50%, and so on and so forth. So if you are obsessing over what's happening and there's no action to be taken, then go for a walk. Now, if you're monetizing open gains, and this is a big one, I see this problem a lot. You look at that stock and you're up, let's say, 50%, and you look at the amount of money, you're like, well, I could pay off a credit card with that. I could put a down payment to a house. I could buy a car. I could do whatever. Well, if you start monetizing that money, you're going to be likely to pull that money out of the market. Well, if you quit at 50%, you'll never make 100%. If you quit at 100%, you'll never make 200%. If you quit at 200%, you'll never make 400%. You know, you're probably thinking, well, how much is enough? It's never enough, because you will have losing trades, so you have to make as much money as possible. People say, Dave, what's your holding period? And I tell them 10 years, hopefully longer. Now, I know the money and position management will take me out much sooner, but sometimes we could hold on for a very long time. For instance, the one we got in back in January, we're still in it. Here we are, what, in July. So we're going on 8 months in this position. So just make sure that account is for trading, and you're not going to be tempted to pull money out to pay the rent. Now, if you're over trading, then you need to keep yourself crazy busy. I get here about 5:30 a.m. and if I got home, I think I got home last night at 5:30, and my wife's like, "Are you done with work?" She couldn't believe I was done already. I just have a ton of projects, and I know myself. I have it's a bit of a sickness. I always have to be moving. If I'm watching TV, I'm shaking a foot, and it drives my wife nuts, which is a short trip, but that's another story. I hope she doesn't watch this. I do a lot of jokes at her expense, but I love her dearly. But anyway, I know myself, and I always have to be doing something. I cannot sit still. Like to be on vacation, like sit on a beach, I'll just absolutely nut up. I can't do that. I got to get in the water and swim, or I got to go fishing, or do something. You know, rent a jet ski, get a windsurfer. I just can't sit there. It makes me crazy. And that's the last thing in the world that I want to do on a vacation, is to sit there and not do anything. So I keep myself extremely busy, because I know that I'm going to be tempted to fire off a trade. While I was working on these slides, I took a break and I'm watching the markets, and I was getting ready to click into a trade. I'm like, what are you doing? You know, it's like, get back to your slides. You're under a deadline. This is not a trade that you should be taking. It's not part of your plan. You're just firing off a trade to be firing off a trade. So keep yourself very busy. One story that I have here about keeping yourself busy is I have a client who called me up a while back and said, boy, Dave, my trading has gotten just tremendously better. And I'm like, well, that's great. What'd you do? Did you find a methodology different, or do you understand my methodology or the money management? What's going on? He goes, my doctor quit that was working the hospitals at night, and now I got to fill in her shift. So he's literally working day and night. He doesn't have time to trade, so he's only taking the best trades, and I call it the can't stand it test. If you can't stand it, if you can't stand it where you feel like you have to take a trade because it's the greatest thing you've seen, then you'll trade. Otherwise, you're like, this trade doesn't look so great. I'm too busy anyway, so let me just back off for a while. Now, if you're still having trouble, I would suggest that you reduce your share size down, but be consistent. So by that I mean, let's say you're working up to a 2% per trade, which is the maximum I recommend. Maybe back down to a 0.5% per trade, and as you become profitable, let's say over a string of trades, then maybe bump that to 3/4, and then work back up to that 2%. Don't go in at 0.5%, be profitable, and then jump to 2%, because if you lose on that trade, then it's going to take 4 trades just to make up for that one loss. So that's what I mean by being consistent. I see a lot of people go into a downward spiral. They'll risk 2% and they'll lose, and then they'll risk a 0.5%, 0.5%, 0.5%, and oh, I got this, and they risk 2%, and then they'll just rinse and repeat. Now, you might need to go back to the books, and your stock selection or other market selection could help you out tremendously. If you're picking the best stocks and the best markets to begin with, then you're going to catch more winners, then psychologically you're going to feel better about things, and then you'll also, as I often talk about, end up in this positive feedback loop where you're also following the proper money management, because you know what winners look like and you know what losers look like, and you know that you have to kick the losers out because they're taking up space for your winners, provided, of course, they hit the stop. And then one thing I'd recommend is just trade one pattern until you become successful or become successful again. And that's why I wrote the course Trading Full Circle, because it's like if you're not profitable, then this is what I want you to do: trade just one pattern. If you are profitable but you hit a rough patch, and you're making a lot of these mistakes, then go back to just trading one pattern. It always amazes me that people who weren't successful with one pattern think they could trade 10 and then magically become successful. And then again, just follow the plan for just one trade. Now remember, this can be a pretty lonely sport, especially when you're in a drawdown, which again, as we said earlier, or as I said earlier, you are in much of the time. You feel kind of like it's just you and there's something you're missing. Well, you're not alone. Everybody goes through drawdowns. I'm friends with people who run millions of dollars. I'm friends with people who run billions of dollars, and they all have drawdowns. So it never gets easy, but it does get easier. And as Bella says, you can do it.